happened to catch last Thursday's remarkable run in longtime Cramer fave PerkinElmer, that's PKI for you home gamers. Here's a company that makes life science and diagnostic equipment with a stock that vaulted 8% single session after reporting a fantastic quarter. Darn thing is now up nearly 20% year to date, and it's been a big long-term outperformer. It's up 135% over the past 5 years. That's double the return you get from the S&P 500. Now, I've been a believer in this story for a long time, but even I was shocked by PerkinElmer's most recent numbers. The company posted a 5-cent earnings beat off of an 86-cent basis, higher than expected revenue, up 29% year over year. A lot of that growth comes from acquisitions, but when you drill down both of PerkinElmer's divisions, life sciences and diagnostics, they gave you 10% organic growth. That's really impressive. Oh, and management raised the full-year earnings forecast. No wonder the stock caught fire. So can it keep climbing? Let's check in with Robert Friel. He's the chairman, president, and CEO of PerkinElmer for the first time in about 7 years to learn more about where the company's headed. Mr. Friel, welcome back to Mad Money. Good to see you, sir.
Yeah, good to see you.
Thank you so much for coming on.
It's great to be here.
All right, I'm going to quote a piece of research. I never see this. Here's a research. This is PerkinElmer. From Jefferies. The guy says, PerkinElmer's 10% organic base business growth in second quarter made a mockery of the consensus view, plus 6%. How did you make a mockery of the 6%?
Well, I don't know if we made a mockery of it, but we're very pleased with the performance in the second quarter. And as you mentioned, it was broad-based. It was in both businesses. And I think what's fundamentally driving that is probably three factors. First of all, we've been on a path for the last couple of years to really improve the portfolio and focus the business in those higher growth markets, more attractive. So I think that's been very helpful, and you're starting to see the benefits of that. Benefits of very good macro trends impacting those markets. The second aspect is, again, we've taken up our R&D spending. We're driving innovative new products into the marketplace, and they're starting to sort of see the growth that's driving that. And then the last one is, I think we are executing better as a company. And, at the end of the day, the foundation of a great company is the organization, and I think we've got a terrific organization.
What's interesting, 5 years ago, I wrote a book, Get Rich Carefully, where I said maybe you have to split the company up to get the valuation. It turns out that the two divisions, if you can explain to people, really do work quite well, but the market just wasn't giving you the credit until now.
Yeah, I think that's right. And, look, that was one way of creating value, I think, splitting the company up a couple of years ago, but I think we felt that if you look at the core capabilities of what PerkinElmer does, it really gets down to detection, imaging, and then we also do some software and informatics. So we have the ability to really detect very accurately, very quickly, very small microscopic items, and that allows our customers to really make a dramatic impact in health, sort of broadly defined. And so what we're trying to do is take those capabilities, leverage those into fundamentally three markets, and maybe we can talk about those.
But I do want to say, and when you say informatics, you're really talking about artificial intelligence.
Part of, eventually it'll go to that, but right now, eventually, I think that's the opportunity. But today, what happens is, as the detection and imaging instruments get stronger and stronger, more sensitive, they generate more data. And so you need the informatics to help make sense of that. Eventually, with deep learning and artificial intelligence, you're actually going to be able to have a lot of that done by the machine. It'll be more accurate, much quicker.
Well, it sounds like there's a lot of, let's say, screening, in vitro screening, where, and in China, people seem to be crazy about your stuff.
Yeah, we've had very strong growth in China. And again, if you look at the sort of three end markets we operate in, and I would say this is broadly defining health. So you start with what we eat, what we drink, what we breathe, right? So about 25% of our business goes in looking for contaminants and pollutants in sort of the environment, right? So that's very important.
Sadly, really important.
Right. So, I mean, for example, we can look at adulterants in your food within 30 seconds, or whether your water has, unfortunately, lead or arsenic in it. Right. Another 40% of the revenue goes, and then if you are sick and you go to the physician and you want to get diagnostic testing, we supply tests there, and again, it's all around being accurate and being able to describe what the potential disease state is. And then if you are sick and you go to the doctor and he prescribes drugs, about 35% of our revenue is focused in pharmaceutical companies and helping them see inside the cells, actually real-time, live cells, and understand the mechanism of the drug. So as China has been investing in healthcare, we've been a big beneficiary of it.
Well, I have to just, in the time remaining, I'm reading this book by this fellow Carey about Theranos. You must have known that nobody could be doing that. The claims they were making. You were the most sophisticated, maybe aluminum, maybe thermo, maker, but probably of diagnostics of anyone. You must have known it was impossible what they were doing.
It's interesting you say that. A number of years ago, one of our board members came to me and said, what is this? And we spent a lot of time, first of all, trying to find any kind of scientific or technical knowledge about the company. Very hard.
Very hard. They're opaque.
And we sort of concluded that we didn't understand it. And so since we didn't understand it, we stayed away, fortunately. But, it was, as we're finding out now, it was there wasn't much substance behind it.
No, and yours is totally substantive, and everybody uses you. I want to congratulate you for just bringing out all this value. You did it yourself. You have a remarkable company.
Great.
Really
well,
fantastic.
Thank you very much.
That's Robert Fields, PerkinElmer's chairman, president, CEO. This is the kind of company, I always talk about diagnostics, how much I think that's a great theme. Life sciences, food markets, it's all right there for you. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.